We have S. Krishna Kumar who is joining us now to talk about the market from Lion Hill Capital. KK, afternoon. Thank you so much for your time. How's your portfolio doing? What are your observations right now? The market is just not stopping 22,400 now. People are expecting some correction, but it's not obliging. Are we heading into a pre-election rally, or election is now just a matter of formality? It is priced in already.
I think, like you rightly said, there is a lot of good news that happened in the last 3 months, which got factored in to the valuations already. Be it the earnings growth, you had a fairly good earnings season. You are seeing that most pundits believe that BJP will kind of come back for a third time. So, given all that, and the fact also that interest rates have kind of peaked globally, and it's just a matter of time in the next 6 months about when they would start cutting rates. So all these are already into the market in terms of the premium valuations that one would look at across most sectors. So the short run, well, it's very difficult to call. I do expect continued volatility. Of course, valuations and other fundamentals do point to time consolidation or a correction for the near term. But the FIAs have been a little soft on India in the first 2 months, and if they choose to kind of come in the FOMO factor, then you could have also a kind of a euphoric move up in the next couple of months. So it's very difficult to call the short term, but I think the long term, the India story remains intact. The best placed markets and countries to grow well in the next decade. And if you factor in that, I think you would have to kind of sit through a correction that is kind of on the horizon at some point.
How's your portfolio allocation looking? Have you been a buyer last few weeks, or mostly researching and sitting on the side?
I have been raising cash probably at about 25% plus cash at this point in time. So probably, I am definitely in a camp which believes that there could be good opportunities that will open up when there is a kind of a correction in the next couple of months, because all the good news is kind of in the price in my mind. And if you look at global markets also, it's a very concentrated rally that's happened in US, etc. So I do expect a bit of ease on equities in the near term.
What's your largest holding looking like? In fact, in either name, I mean, if you're not comfortable sharing name, talk to us about the theme which are the most two, three meaningful positions in your portfolio.
Yeah. I think financials is something that will always remain one of the large exposures, and one would only try to juggle around between banks to NBFCs vis-a-vis wealth management space. Relatively speaking, depending upon where you are on the rate cycle and who could benefit. Within that, I think wealth management is definitely has a huge runway over the next decade, and we are seeing a lot of medium HNIs, MHNIs as we call it, also coming into wealth management and offering taking care of taking services. So that's a huge space that you should be looking at. The next would be definitely from a consumer cyclical perspective, auto ancillaries and discretionaries are something that one has to be well positioned, and I am also positioned there. And I believe that there is probably there is a little bit more value on the ancillaries at this point in time, and that's where I think we should try and play the auto cycle in the next couple of years. And the travel resuming and business confidence also doing well, with foreign traffic coming back into India both for business and for leisure. I think the hotel space and the hospitality is definitely well positioned to have significant upsides on profitability and cash flows, which is going to be very, very, very big, and that could see them expand quite aggressively in the next 3 to 4 years. Lastly, I think hospitals and healthcare is again a very defensive space that one should be in, because I think as affordability improves and insurance penetration is going up, I think people are probably more conscious and of health, and are moving, upgrading themselves to better hospitals, etc. So I think in the listed hospital space, I think there are tremendous opportunities across on both national players and regional players, which we are quite positive.
Right. So, in hospitals and diagnostics, is valuation not a challenge? Or are you looking at adding these names on the current issue of administration of the cost and all? If the stocks come down on that, would you be a buyer?
Yeah. Well, I think it's very important for society that there is a bit of rationalization of tariffs, etc. But I think India is such a vast country that you have to encourage more capacity creation, etc. My belief is that hospital companies would be able to maintain and improve on profitability, given the kind of services they offer, and health consciousness that is improving across the board. I would definitely look at using any corrections to add to positions there. Diagnostics is again another sector, but there is probably a little bit more haze there, and relative to valuations, we do find that there is still a fair amount of competition and pricing issues that are there. So I would probably be a little bit more circumspect on diagnostics, basically, but play it through the hospital sector.
KK, what are your thoughts on pharma space? It is perking up in trade today, and last few months, if you see names like Cipla, Lupin, even Sharma Fund Pharma has done very well, but even more the commentary coming from these guys are very good for next few quarters.
So I think as the markets are heading into a phase where the frontliners, which are leading the rally, could be in for some consolidation. Money is moving into other defensive areas, and given the consumption issues on the FMCG side, particularly in the rural segments, and the pressures on the IT companies from a concern on IT spend, etc., the only other sector that is looking available to allocate is pharma. And within pharma, if you look at the meltdown in chemical prices and bulk prices, etc., which happened in the last 12, 18 months, is now starting to help the input pricing cost for the pharma industry. So that is helping them claw back a lot of profitability. And given that they also been sizing up in the last couple of years, operating leverage benefits also kicking in. So a combination of gross margin expansion, better pricing, and cost control on other areas are helping pharma companies, and particularly the branded players that you mentioned. So there is definitely a move towards a defensive growth kind of sector, which pharma offers at this point in time.
You have managed, small cap, mid cap schemes for a very long time. Which side of the argument are you? There is froth in small cap, mid cap, or not at all?
So I think even the regulator and AMFI have come out with views that there's been a kind of a bubble probably building up in the small mid cap space, particularly in the mutual funds schemes where a lot of inflows have happened in the last 12 months. There's a clear shift and tilt towards mid and small cap funds away from large cap funds, basically. So that is definitely putting pressure in terms of on the fund managers to keep finding the right ideas or allocating more to the same at higher valuation. So it's a kind of a tough call. And while benchmarks are always fully invested, so if you do hold higher amount of cash, you would probably underperform when the market still goes up, like what's happening now because of flows, etc. So I think it's a tough situation for the funds, but on the balance, I think valuations are at a premium historically and relative, basically. So I would think that given the kind of growth that is seen at this point in time, valuations are expensive in most pockets and mid and small caps, and one would do to probably do better to book some profits and be ready for any good correction to add into them again.
Right. All right, KK, we'll let you go on that one. Thanks so much for joining us on the show today.
Thank you.
That was S. Krishna Kumar of Lion Hill Capital. We'll take